What is going on? Welcome back to Fanatic Journey. So today I wanted to talk to you about SoFi. Obviously the price is going up over the last several days, very optimistic. In addition to that, a lot of institutions continue to buy the SoFi. So a lot of people want to know, is this the real deal? Is this the start of a very big rally, or is this ultimately going to be another rug pull? I'm going to give you my 2 cents on all of this, but before I get into any of that, making sure you guys hit that thumbs up and subscribe. I greatly appreciate that. With that, let's get right to it. Live ticker going at the very bottom, 1.66% up. Some key takeaways is the volume. So 18.9 million being traded as of right now, which is a little bit lower than what we're used to. 53.7 is the average. 2.4 million shares being traded by institutions, and that is on the secondary market. So that is kind of what we're used to for the institutional purchases. Keep in mind that is on the secondary market, like I just said, but when it comes down to the dark pool, there has been some good buying opportunities based on that. So 777,759, 309, and obviously you can see the rest. Over the last couple days prior to that, it was a little bit slower, but obviously with its inclusion on the Russell 3000, a lot of institutions were buying SoFi significantly. So I think more so over the last little bit, SoFi has been getting a lot of big purchases, whereas a lot of other growth stocks haven't necessarily been the same. But at the end of the day, a lot of people want to know, is this the real deal? I'm going to do a little bit more technical analysis to kind of give you my projection of this, but I just want to quickly pop over to Interactive Brokers because there are some interesting things that has been coming out lately, and I like to use them for a lot of information. But looking here, I find a lot of the articles coming out lately are very much bearish about SoFi, but yet the institutions continue to buy SoFi. So you kind of see a little bit more of a discrepancy going on. And I want to point this article out because I completely call this BS. They are bringing up the $237 million worth of stock that has been sold this year, which largely is because of taxes, but they do not state that. And they do not state the fact that the insiders on SoFi have been buying so many shares. It's like completely absurd. Like even Anthony continuously buys, but yet it's now second nature. Oh, he bought, okay, whatever. Whereas any other stock, oh my God, the CEO bought. So it's kind of interesting to see that these kind of articles are coming out, even more so as well. Jim Cramer did talk about SoFi, saying that there's no known catalyst to cause it to be a buying opportunity. And still, 2 reasons why you should be extremely cautious about these hot new fintech SPACs, one of which they refer to kind of starting out as SoFi. So at the end of the day, a lot of bearish articles are coming out, and especially right now as well, July the 12th is the shareholder meeting as well. So that's something as well a lot of us need to kind of realize and kind of anticipate a little bit more volatility leading up to there, because there's going to be a lot of hot topics that are discussed. But when it comes down to though, what is the rest of everything else doing? What is shorts doing? I like to use them as a good benchmark. As of right now, they are closing a lot. So 0.89%, which works out to be 3.74 million shares being returned. Cost to borrow is kind of maintaining itself. Utilization is still 100%. Short score is 73.28. So overall, it's kind of stagnant. They don't necessarily know whether to double down or just kind of stay where they are. But at the end of the day, there is still a lot of fear out in the market. There's still technically, we did have that inversion yesterday from the yields, which did insinuate that there is going to be a recession potentially coming in the near term. And the market's taken that as a positive because it would slow down the interest rate hikes brought on by the feds. So this is still a good and a bad kind of scenario, but again, going back to it, there's still a lot of fear about recession still out in the market. But I want to talk on technicals because I'm a very big technicals fan, and there is a lot of bullish signs that's happening right now. So I do have all the important moving averages. So I have 50, 100, 200, Bollinger Bands, RSI, stochastic, momentum. Momentum, you can tell number of buyers is kind of maintaining itself down a little bit today, which like I said at the very beginning, kind of coincides with a lower volume. And on stochastic, you see that deviation, black line above the red, showing a nice bullish sentiment starting to form. And on the actual chart, we are struggling a little bit today. We were up significantly more over the $6 mark, very close to it right now though, but unfortunately we kind of were facing a little bit more stronger resistance at the central Bollinger Band. So it does hopefully look like we might pass that today, but at the end of the day, this is just another great buying opportunity if you ask me. But more so looking at as far as the rotation of capital, I think that's a little bit more important for us to kind of realize. And one good way to do that is to look at cryptocurrencies. Cryptocurrencies, as far as their average volume, has been going up, insinuating there's a lot more institutions willing to take on a little bit higher risk. In addition to, like I already mentioned about the institutional purchasing, I feel that a lot of individuals and also institutions are all pointing to that the recession may not actually come. That it's just been kind of a hearsay, because they've talked about recessions plenty of times in the past, and usually it doesn't really amount to anything. Obviously, the NASDAQ and a lot of its stocks have gone down considerably, and obviously that's an understatement in SoFi's case. But at the end of the day, there is again to a point where a lot of these growth stocks are at their basic, almost intrinsic value. So as far as a risk versus reward, it's not really worth it for it to go much down further. So this is why you're getting a lot of institutional purchasing. So take that how you see that. Keep in mind, I'm not a financial advisor, so do your own due diligence at the end of the day. But in the end though, I think you can't ignore the fact that institutions are continuously buying. So most likely this isn't a rug pull. That's my own 2 cents. I think that this might have a little bit more consolidation back down to the $5.50 range, which from there we should hypothetically trend back up. As far as some points to keep in mind, I'm just going to point out here some resistance and support points. So you see the first, second, and third, so 607, 631, and 677. We did actually get past the first one, and it looks like as well, most likely today, we will get past or try again on the first one. On the contrary though, first, second, and third support, $5.37, $5.14, and $4.91. So looking at it from this standpoint, it could potentially go either way. Right now, I think it's just following the broader market, largely because of this, like I said, about that inverted yield, how they're taking that as a little bit more of a positive. I've never seen that happen where such a kind of a negative sign is being sought out in a positive image. It goes to show that how much actual institutions and also retail investors are just eager for any reason or justification for the market to go up. I think it's just well overdue for a rally, and I think people are finally done with all this complete BS about first it was COVID, and then technically you get a lot of people saying that things are overvalued, and then all of a sudden interest rate hikes, and then now inflation. It's just been very draining for investors. So I think right now we are having a little bit more calming in the market and hopefully a little bit more hesitance. But at the end of the day, I think, like I said, this is a great buying opportunity. But regardless, this is all just short-term noise. If you do have a long-term time horizon with SoFi, it shouldn't really make a difference, because this is going to be easily $20 to $30 by next year, hands down. But even with what JP Morgan is saying, they're anticipating it being all-time highs this year, which is very optimistic if you ask me. But let me know your thoughts on all of that in the comments below, and if you have been buying, selling, holding, let me know what you've been doing with SoFi in the comments below. If you haven't already hit that thumbs up, subscribe, do all that fun stuff, greatly appreciate that. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, I appreciate you guys watching, and let's all make a lot of money on SoFi.